Good afternoon, everybody. It is Wednesday, the 20th of October, 2010, and we should be live here. So let's take a look first at the S&P 500. We've had a little bit of volatility here the last couple days, but the market's recovered nicely. And, we're looking right now at a 30-minute time frame, and on here I have this 5-day moving average. And what you really will notice is that really, and this is what I was pointing out to the subscribers yesterday, is the last couple times that we've broken below and closed below that 5-day moving average, it was at a point where it kind of looked like maybe these trends were running out a little bit of steam and due for a little bit further consolidation. And that's kind of the way it looked yesterday as well. We were below the 5-day moving average. It was starting to decline. We did closed somewhat strong yesterday, but we were right really at this important level here at about 116.85 or so. And today, obviously, we gapped up above that level, continued to ramp higher, didn't really run into any resistance where it would have looked like we may have, but we did close at that 17.85 level. So let's back it up to the daily time frame, and we can see here the main theme continues to be that we're in an uptrend, that we're not breaking down below important levels of support, and that any weaknesses that we're seeing just turn to be short-term events. When we have a rising 10, 20, and 50-day moving average, and we back it up to a longer-term time frame, when we see a longer-term 200-day moving average advancing, that tells us that we're in a bullish environment right now. And obviously, on the weekly time frame, we've been talking for a while about this inverted head and shoulders pattern that we had broken the neckline back at what was the price back there? 113.80, I think it was. And when we broke that level, it indicated a potential high near 125 target, that is. And right now we're heading higher, and we could possibly be headed for that 125 level. We have to look at it one move basically at a time. And so far, everything we're looking at here, we found, and this is a pattern actually for a lot of the individual names as well. Is what we're seeing is that the markets and the stocks have been riding the 10-day moving average, and then they fall to and find support at the 20-day moving average. I was kind of saying, I was saying yesterday, gun to the head, I thought we were probably going to drift lower today, come down towards that 20-day moving average, and maybe settle in near about 115.60 to 115.50, 115.60. That would have been what made sense, but I was also pointing out that we have to be aware that if this market, gaps up, and if it runs and gets above that 5-day moving average, you got to trade what's in front of you, not this, what you think should happen. Here's the advanced decline line for today, and we saw that, it's right from the beginning of the day. It started out very strong and stayed strong throughout the day. 2,300 advancers and just 691 decliners. So buyers were clearly in control. When you look at the volume-weighted average price, we had that initial volatility here till about 10:30, and once we broke to the high there, that's when the buyers really took control. That's when that and I lost it now. I think I shut it off by accident. But that's also when we had seen the advanced decline really start to take off as well. So we closed above the volume weighted average price. We're up here into this area that's been resistance basically recently. 118.50 is what the big number, I guess you could call it. 118.50, 118.60. That's the level. If we can get up through that level, then we're likely to continue on to visit some of these other levels, such as closing this gap here, and then the year highs are up near 122. And when you look at the strength in the Nasdaq, obviously the Nasdaq, we've had some big earnings reports. The market is absorbing those and moving higher. I mean, we had Apple earnings that kind of put a scare into people, but they're really the stock has held up really very well. We're only down a couple points from, and that's not Apple right there. We're only down a couple points. We were at 318 basically, so we're down 8 points on a $300 stock. That's really not much. We're still holding a rising 5-day moving average. We're above a 10, 20, and 50-day moving average, etc. And obviously the Nasdaq itself is holding on to these key levels also. And this level here at 50.5 basically is not only this year's high, but 50.5 50.5. Also, we look back and we can see that that was the highs of 2008 as well. So, this 2008 level is basically 50.5. We've broken that, and now we're really kind of gunning for these 2007 levels up near $53 a share, and then above that we've got pretty close to 55 even. So when you look at the SPY, it doesn't seem that unrealistic that we could break these highs for the year, and you want to look at this. I mean, I don't know how valid it is on a weekly chart as a bottoming pattern, but it does look like a big giant cup and handle pattern that, I think that if we get up through those highs from earlier in the year, then 125, the inverted head and shoulders pattern target, is what would make sense. But we also have to look at it and say it could be even 130 because we've got that prior resistance up there. That's that had been basically a level of contention as far as support and resistance in 2008. Let's not get ahead of ourselves though with such bullish look at the market. But the main focus is that we are in an uptrend. The market is holding key moving averages, and it's also holding key levels of support. We might break down through some short-term levels of support for a small period of time, but like we saw yesterday afternoon. But all in all, we're looking at a market that's really very healthy, just showing a nice stair-step pattern of higher highs and higher lows, and that's what to focus on. We're not breaking below key levels of support. The moving averages are rising, and that's what we have to stay focused on, with always an eye towards risk management, of course, as well. So we can look at things like let's take a look at some further information here. Scalping Netflix. Now, Darren, I'm not going to scalp Netflix on earnings after here, but here's something interesting. Here was the golden cross, pretty close to the lows, and now here we're getting close, and people are starting to talk about the golden cross right up in here. So since we had our sell signal, the death cross, this market has rallied, went from 103 to 117. So again, that's the type of voodoo technical analysis that leave for other people to do. Stay focused on the individual, the shorter term action and how it fits in with that bigger market structure. And as long as prices continue to hold up when we're in an uptrend, then the market remains innocent till proven guilty. Let's take a look at it. Netflix, though, by the way, NFLX, and we've got it closed. Oh, so we're up. It closed at 153.15, and here we can see there was an initial quick sell-off. And now it's rallying very nicely here. So we're looking at the the live tick by tick basis here. And for some reason, I know why. I can't bring my. Let me see if I can do it like this. How can I do that? Well, here we go. So here's a level 2 screen as well. So you can see that in conjunction with the with the tick chart over here. Very volatile, and I'm not going to do that while I'm trying to concentrate on providing you guys with some analysis here. But anyways, so we've got some mixed responses to earnings. Today we had ISRG. ISRG gapped lower, but look at the trend. News and surprises have been following the trend. ISRG was below a declining 10, 20, and 50-day moving average. Apple above those moving averages. Netflix above those moving averages. But ISRG, it's in a downtrend here already, so betting on that type of earnings on an upside wouldn't have made sense. But I'm not an earnings bettor anyway. But anyways, let's go back to the take a look at the Russell 2000. Russell 2000 also acting very healthy. Looking for year highs here would get us up at about $75 a share, which if I drew the trend line in straight is pretty close to the highs of 2008 as well. We had broken that resistance at 68. We're stair-stepping higher in here as well. We get these shakeouts, and back to the daily time frame, they're really holding. I mean, look at that 10-day moving average and the 20-day moving average. If we're not at least below a 20-day moving average, there's really not a bigger reason for expecting the market to sell off strongly. So the market is and remains healthy. The semiconductors healthy and consolidation underneath this key $29 level. They're consolidating at that 20-day moving average very nicely in here. Just a nice little flag pattern. When you drill it down to the 30-minute time frame, you can see we've got a little resistance at 28.50. Maybe pushing up through 28.50 is what gets these semiconductors kind of back into the gear on the upside, and then they'll be pushing out at that $29 level. If they can clear the $29 level, then we've got room, I think, for a pretty quick move, probably up towards the year highs, close to $31 a share. The financials remain just dead, basically. They are, in my mind, and I've been saying it for months, a complete waste of time. Between 13.5 and 15 is the bigger range. We've come down to the midpoint of that range here recently. A lot of bears get excited and start doing the death chance and that sort of thing, but we're holding 1420. That's the more important level for the financials right now. If they continue to hold 1420, and we've got a 50-day moving average in here, then you can look at these things as just neutral and holding up. 1420 really is the bigger near-term level of support. Intermediate term, we've got this 1460 level that the market's been really focused on, back and forth, above and below is support, resistance, and support, resistance, support, resistance, and just a lot of choppy action that, we've got a lot of bad headlines, and we've got, Bank of America breaking down, but you got to wonder, is this huge volume, a contrary indicator down here? I don't know. I'm not going to waste my time with Bank of America. There's so many good bullish looking stocks, but you look at Wells Fargo, for instance. Everyone was doing the death chant on that, and look at the reversal we're getting in there. JP Morgan, is JP Morgan done? I don't know. It's really in this bigger range, and I say, why waste your time with stocks like that when we have nice stocks that are breaking out or that have broken out, and we can focus on the pullbacks in there and that sort of thing. So let's take a look at gold. Gold is another one that continues to just kind of consolidate here above 130 in that 20-day moving average. I think that near term you got to just kind of let the dust settle a little bit before getting involved in that one. And then we've got the dollar. The dollar's still in a downtrend. It had one bad day for the bears, but it's still guilty till proven innocent. It's very similar, as I've been saying. I've been making fun of this UNG for the last 2 years because UNG just continues to be one of the worst ETFs ever invented, and seemingly headed for bankruptcy, or I don't know. The contract issues on this thing. What are they? Not backwardization, but anyways, there's problems with this thing that make it just a horrible thing to own or to trade. I guess that's really all I had to talk about here today. I mean, we could take a look at the home builders. Kind of a waste of time, but like financials, if they got above $16 a share, though, maybe there would be some interesting upside action towards the end of the year as shorts get squeezed. If you look at last year, the most hated group there was the IYR, the commercial real estate. And commercial real estate, everyone last year was saying this is the next shoe, this is the second shoe that's going to drop. It's commercial real estate. They stopped giving, you stopped hearing that about 6 months ago, but what we have is the ability to look at this thing objectively and then look at that daily time frame. Today, we were concerned about it a little bit back here, that maybe it was from a failed move, came a fast move lower, but it held that rising 50-day moving average. It consolidated, and then here we are breaking out on big volume again today. So this market is going to take some time before it really does pull back. I'm just going to mention one stock actually right now, which is Sears Holding. I had written the article about on Monday. There's a big short position in here, and if you look at that article, the shorts are basically pretty much underwater in this thing. If we just take a horizontal line straight across, probably clearing 76.5 or so, I think you're going to see the stock get up towards this 82, 83. That's also where we see the 150-day moving average, which is kind of coming down at it from above. But SHLD, I'm long some. I think it's a good play if you're a swing trader. That your stop probably still should remain near about $72.80. But anyways, I guess the server crashed, but this is being recorded, so I'm not going to take any questions from people on Twitter. We will do that on Friday. Thanks for tuning in, and we'll get this recording up shortly.